According to the 2022 balance sheet of the United States government, the assets that we have are $5 trillion. That's it, $5 trillion, of which 42.3% of the assets that the United States government holds, 42%, is student debt. And on top of that, we have 151 trillion in liabilities.
Student debt went through the roof. Now it's our biggest asset.
But from where I come from and what I've studied in Austrian economics tells me that every time you see inflation throughout history, it's an increase in the money supply. And that's exactly what we have done over the last several years, printed more money than in the history of the country preceding it, creating these problems, these distortions. The question is, how do you ever print yourself out? How do you get out of 151 trillion in debt with 5 trillion in assets? And you talk about trust of the West versus what the BRICS are trying to do. I'll just simply say this. If Jim Rickards is right, and I believe he is, I've been saying it for 3 years, and they issue a gold-backed currency and use the distributed ledger technology that the Chinese have mastered over 4 or 5 years with their digital yuan.
Distributed ledger technology is also known as blockchain.
That's right. So you show what every country that has signed up for the BRICS is going to peg to the blockchain. And if you do it right and have it audited by independent auditors, you now have trust. And in other words, trust is not in our past, it's not in our words, it's not in any of this. Trust in terms of the BRICS, maybe people don't trust China and Russia so much, but trust is gold and immutability of a blockchain. And if you have it independently audited, you immediately have gained a large portion of the world's trust in a system that is sorely lacking trust these days.
What does reset mean to you?
Reset means to me, look, when we realize that by raising interest rates to 5%, we put great strain on the banking system. And you can see that. And you could see if it went up just a little bit more and a little bit more, what kind of strain that would put on the system. A reset to me is an environment where a decade plus of suppressed interest rates and easy money created massive distortions in asset prices. So we've had massive distortion in asset prices that have pushed prices stratospherically high. One should question whether or not price discovery is valid anymore, and I don't think it is in this environment. When it will be is when interest rates rise high enough. Going back to the comment of it being Putin's inflation, to me, they were looking for a villain to cast away the focus of what the Federal Reserve has done by creating so much money and suppressing interest rates and creating these distortions. To me, the villain now, by pushing Saudi Arabia away, they have created an environment where the rest of the world, if indeed Jim is right, and they issue a currency backed by gold, and at the same time, Saudi Arabia says, you know what, we're going to take the new BRICS currency for oil. We're no longer accepting dollars. Every single country in the world for the last 50 years has had to stockpile dollars to buy oil. If that happens, and now you have a gold-backed currency that is being issued amongst the BRICS nations, and you have all of these countries joining together, which represent north of 80% of human population, not going green, and we are. And Saudi Arabia says, thanks for the memories, and they dump dollars. Why, yeah, those dollars come home hitting our shores with a tsunami of inflation. And when that inflation hits our shores, the byproduct of it is interest rates spiking. This is not something the Fed would be able to control. This would be the back end of the bond market going straight up, the 10-year, the 30-year, straight up. You can't have 15, 20% inflation with 5% interest rates. In other words, it is an event that would trigger massive inflation and massive spike in interest rates, which is inversely correlated to everything in this country that makes people feel wealthy, stocks, bonds, and real estate. And to me, the reset is simply a massive increase in interest rates, which will create a implosion of stocks, of bonds, and real estate, which are all coming from very high values, which are inversely correlated to a spike in interest rate. Now, look, every single country has been told by the Bank of International Settlements that you must have an operational CBDC by 2025. Right now, all of the countries that represent 95% of global GDP either are in beta testing or are in production of a central bank digital currency. It is real and it is coming, as far as I'm concerned. And of course, when you look at the comments coming out of the International Monetary Fund the other day, it becomes increasingly more obvious not only that there's a central bank digital currency coming, but maybe they notice what's going on with the BRICS. As Kristalina Georgieva, their head, came out and said, the head of the IMF, and said, hey, central bank digital currencies really need to be backed by something in order to be considered legitimate. And what is the only other tier one reserve asset in the world? Oh, yeah, that's gold. And what have the central banks been buying more of than at any time in the last ever, over the last 18 months? Gold. And so the high probability, after issuing a report by the IMF recently that said gold, an international reserve currency, question mark, a barbarous relic no more. I think this is going to be a very interesting third and fourth quarter, as not only do we see the anticipation of the BRICS announcing their new currency, but we also have, as Janet Yellen mentioned, speaking of Janet Yellen, that we should expect many more bank consolidations, as she calls it, in the third and fourth quarter, as many of these loans and leases to the small businesses and the commercial real estate, the 70% ownership of all of those things are held by the regional banks. 70% of the small business loans, 70% of the commercial real estate. A lot of this stuff is going to be reset in the third and fourth quarter. Risk management, and to talk about regulator, in the fact that, you can Google this and see it, just blew my mind when I saw it, the top 10 checking accounts at Silicon Valley Bank, and these are massive venture capitalist funds there, right? With very strong political ties. The top 10 accounts had $14 billion in them. Yes, these are the corporate accounts. And they had $14 billion amongst the top 10 accounts. Now let's just break it down. Number one, FDIC insurance, $250,000 in their accounts, and risking all of it to a bank failure. And not only that, how about what were the rates we were getting in checking accounts, even today, as rates have gone up? But what were they then, 2020, 2021? You're talking less than probably 1/5%.
Right.
So
0.2%.
where were the regulators and where were the risk management saying, why aren't you putting the majority of your money, guys, in 30-day treasuries or 60-day or whatever, and take the risk away from the banks, all of it, instead of having only $250,000 insurance? You have it now, all of it backed by the faith and credit of the U.S. government.